How's it going? Welcome back. It's Jonathan. Now, I haven't done a video for a little while, and quite frankly, I haven't done a video for one main reason. Actually, I've got nothing to talk about. I've already produced all the research and all the analysis for this year going forward, and unlike some other YouTubers out there, it's not my job, it's not my main source of income to come out here and do YouTube videos to pump crypto, tell you the dollar cost average in. That's not my job. A lot of these people out here are, they're all choppy. They're all over the place. You have to admit that. They're all over the place. They don't know what the hell is going on. You look back here and you look at our 2022 cycle tracking tool, and all we got to do is follow the cycle that is playing out. It's as simple as that. So for those of you who don't have access to this, you can go ahead and get access. The link is in the description. I have not been making videos because you guys already have this information. Those are in the back end. You guys know what's happening. You guys know what the potential bias of the market is at the moment based on the cycles that are in play, and all we need to do is move with that cycle. So as you can see, I'm only showing you part of the screen right now, and quite frankly, I told you I wouldn't be showing you any of the cycles this year, including the time counts, because it is now a paid product and people have paid to get access to it. So if you'd like to get access to this, if you'd like to do and see what other people are seeing, then just jump into the back end. It's as simple as that. But as we can see, if we look in at the price of the market at the moment, we are trending lower. Of course, we are going to get our bounces and so forth. If we take a look at the orb period, so the orb period for the last cycle was this period here, with the midpoint being our time frame that we're watching for a low. Our orb was just a few days outside the actual low that occurred. I believe it was around 4th of December, and that was the low that we were watching. So that's the low that we had started counting the next cycle from. And if you have the cycle tracking tool, you'll know that there is an important low, at least at the moment, that we're watching in this period here. This was all produced last year. Last year I went into the markets and I looked at the potential direction for 2022, and I put forward a cycle that could play out with the market direction and exactly where our lows were going to be in the future. And everything at the moment is lining up, and unless something dramatic changes, I am looking for a low to occur in this period here, which is going to be lower than the low that occurred before it. So that would put us at a left-hand side translation, which means this is our top. The market's moved down since then. We may get some sort of bounce, not too sure just yet, but we are looking for a low that will be lower than the low that occurred on the left-hand side. Now we've already moved lower than that low, so we've already seen weakness in the market. And if that weakness continues, we could break the same on this side around this level here. So that is around the 40,000 mark. Or we could push even lower, and some other levels that I'm looking at right now around, or just actually, you know what? Let me not guess. Let's just go ahead and move straight over to the price chart, and we'll take a quick look at those levels. So quite frankly, give me a second. I'm going to shut up. I'm just going to put these analysis on for you right now. Alrighty. So we're definitely looking at potential for the market to come back to this 36,000 mark. There's definitely a lot of price clustering occurring around this level here. And again, I'm not trying to come out and brag about any form of analysis or come out and brag about any call that's been right in the past, etc. All I'm doing is I'm giving you my opinion, okay, and what I think is the most likely and most probable outcome. So if the market does continue to fall, it could definitely fall down to this 36,000 mark, and if it goes even further, so if it breaks lower, we could even see it head down to this 24. Now I'm not saying it's going, or Jono's called it 24,000. No, that's not the point here. The point is that these are the two levels that we should be watching. This one around here and down to potentially at 24. So give it a little room to move. And then this one right here down to a little bit lower. So in this sort of bracket right here, okay? So that's sort of what we're looking at, those two price points right there. You're just seeing how the market moves in and out of these boxes that we've put on here months and months ago, and haven't even changed them, and that as the market moves into them, price finds resistance, it breaks through them, it finds resistance, finds support. As it comes up, it finds resistance and support into them, and that's because these boxes were produced using harmonics or price points in the past that we moved into the future, and the market will continue to repeat in different points in time price areas where clustering occurs. Okay, so what I'm trying to say is I've left these on the chart for a reason, and if you were to analyze the market yourself, you'd also leave these on your charts pretty much indefinitely until the market obviously moves into new new territory, these very old price levels can still vibrate into the future. So we created these back here, and all we did was just stretch them forward in time, and I believe I've stretched them forward probably for the remainder of the whole 2022 period, because they can still vibrate into this year. So that's just what I'm looking at. Again, not going into any of that. Let's take a look at seasonality. So seasonality, January is generally a pretty, no, I'm not going to say bullish like April and November and so forth, but we should be up there. But as you can see, we're way below market average. We've got to keep in mind that our Bitcoin swings are still down. Our Kagi swing is still pointing down. So these are just two areas that we should be watching. Kagi's down, the swings are down. The squares that we've been watching have been providing a good level of support and resistance. Again, you may recall this is the last 45-degree angle that we were watching, and that break, once it occurred, sent it down to the next 45, came up to the 220, sort of vibrated around this area, and now we're sort of pointing down again. So whether we're going to break through this 45 and head down to the 220, or whether we're going to switch up and hit this 45 with this 220, we just need to wait and see which time counts are activating and moving the market. Now, a lot of people are freaking out, and they're starting to see that the Dow Jones market is definitely, so the Dow Jones is the US market. For those who don't know, it used to track the top 20, now it tracks around the top 30 charts in the US. Let me just go ahead and jump off this forecasting chart right here, because that is, members only. But a lot of people are freaking out that the market over the last few weeks has pushed lower. And if we take a look at the price measure tool for this right now, since the start of January and we moved down, we're looking at a 6.2% loss. Now, no doubt a 6.2% loss isn't a make or break for this market. In the past, let's just say last November, the market did fall around 7.1%. And if we go back even further, we take a look at all these price measures, we'll start to see potentially some sort of similarities between these declines, because that's how the market works. What it does in the past is what it will do in the future until the market shifts. So if we take a look at all these, we can sort of see what we'd be expecting if the market does change direction. Anyway, a lot of people are freaking out that the market has posted lower, and they're wondering, what's potentially going to occur in the future. Well, we've actually produced our annual market forecast for 2022, and this one includes the Dow Jones, includes the Aussie market, and also the Bitcoin. But as you can see, I'm just going to post it up to where we are now. We've already produced our forecast for the year, and if you take a look at this brown line, you can see just how much it's tracked this gold line. So they're both sort of posting around the very similar price action for the start of the year, and that's just because we use cycles that occurred in the past and we're just relaying them into the future. Now, obviously you can't see any further into the future, and I'm not going to show you that. If you want to get access to these, if you want to know what's potentially going to happen next, then you need to get on the inside. Now, a lot of people are going to be, I reckon, caught on the wrong side of this market very, very soon. The market could potentially flip directions anytime now, and that could be pushing us up into new highs, potentially new highs in the market. I'm not bullish for 2022 in Bitcoin, in the US market, in the Aussie market, and gold. Let's go ahead and take a look at gold, because I think that there's some interesting stuff that's happening in gold. So as you can see, we already posted our gold forecast. It's inside the report, and the gold line is what occurred in the past for the forecast, and the black line is the actual market data. This was for the 2020 period. If you take a look at 2021, the forecast, which is the gold line, just pretty much posted a sideways price action in the market. There were some polarity flips, which we talk about, and as you can see with the black line, the market did pretty much follow this for the majority of the time, with the price action of gold heading sideways. Now, if I scroll up, I'm actually going to blur the screen, but I have actually produced the 2022 forecast. And the 2022 forecast, a lot of people are very bullish on gold right now. They're saying that based on the gold cycles, gold's going to go through the roof. They could be right. I just don't think that's going to happen. So we'll have to see what happens as the market plays out. I think gold is going to probably have a stellar year next year in 2023. But if you're holding gold, if you're thinking about buying gold, if you want the price points for gold, where gold could actually be opening up time windows that are probably better times to buy it over than just, dip buying every single dip, this is the report that you want to get, because we've just posted in our 2022, yeah, that's right, 2022 gold price action. Okay, now for those who are in the Aussie market, let me go ahead and just blur the screen again and go ahead and find the Aussie dates. Actually, let's take a look at the time counts. So as you can see, we posted last year all the time counts for the 2021 period. These are all of them for the year, and as you can see below, these are all the market turn counts that happened on those dates. And what we've done is we've repeated this again, and we've moved it into 2022. We've recalculated all the dates, and we're going from there on out. So this is, you know, stuff that you're getting in on the back end. And I didn't really want to show you a lot of the data that's happening in the back end because, you know, people have paid for this. So let me go ahead and show you old data, and you can see what we look at. But again, the Aussie market, you know, we've already posted our forecast for the Aussie market, and you can definitely see this, if you jump into the back end, that the market has posted very similar to what's occurring, and we just need to see which way the market's going to head from here on out. Anyway, let's head back over to this and get off that so I don't have to edit so much of the video. Look, I think it's just very important to remember, and this is the gold chart you're looking at right now, I think it's just very important to remember that a lot of the people that you follow on YouTube, their main occupation is dollar cost averaging into the markets and creating YouTube videos of what they're doing. I'm not saying that they're all doing that, but their main occupation is to create YouTube videos. That's what they get paid to do, and then they funnel you into their back end where they sell you this, you know, meant to be really awesome course. But if they're not delivering you value on the front end, then I can't see that value being replicated on the back end. So what I do is I try to show you what's going to occur in the future, because when you actually come into the back end, I show you what's occurred into the future. I'm not here to say, oh, this could happen, this could happen. I really look forward, and then I show you in the front end, you know, this is the YouTube videos, free content. I show you there, you know, my thoughts on what could actually occur. So that way when you jump into the back end, you can see, okay, I now see how this all makes sense. And, you know, who could have forecasted? Let's go ahead because this is a top that we forecasted in one of our private groups back in 2020. Similarly, using this top here, you could have forecasted this major bottom right here. These two major bottoms were forecasted. This bottom was forecasted, this one was forecasted, this one was forecasted. I actually stopped looking at gold for this period out here because I started to work on our Bitcoin analysis. But all these major tops and bottoms can be forecasted, and I show you in the back ends how that happens and how it works. It's very, very easy, and I don't want to give it away here because it's an edge in the markets, okay? And a lot of people say to me, Jono, look, if you're out to help people, why are you charging people? You know, this content should be free. Well, yeah, sure, it should be free, but actually I paid to learn it. You know, I bought the books, so you shouldn't expect me to give it to you for free just because I spent, you know, 10 years learning it, and, you know, over $50,000 now of my own cash, pouring it into courses, content, mentors. That's not a fair exchange, okay? For me to give something to you, there has to be a fair exchange. And for me to charge my time, charge you for my time, that is what's called a fair exchange, okay? So that's the most fairest form of exchange. If I was to go out to the market and give you something for free, and I'm not a philanthropist at the moment in this field, I'm not here to give you, you know, really in-depth research for free. If I was to do that, then where's the fair exchange? What exactly are you giving back to me for that exchange? Are you sending me, you know, thoughtful notes, or are you sending me, you know, trading ideas, etc., or are you just taking that information, walking away and never coming back? That's not a fair exchange. So the fair exchange at the moment, until I can think of something else, is by jumping into the back end, and that's why we have it as a paywall, and you can definitely come in and get that information. Anyway, let's take a look at the square of 9 for gold. Okay, so gold runs on a very interesting square of 9. Now these I know what you're thinking. Oh my god, we got astrology I should say, because we have our, you know, our zodiac signs, we've got, you know, dates, we've got degrees, what's going on, we've got this, you know, giant looking pyramid thing. Well, everything that you're seeing here is essentially all essence of time. Now time is, you know, time is the father of everything. So without time, we don't exist, okay? We calculate everything in time. We calculate the seasons using time. We calculate a year using time. We calculate, you know, if you're religious, you might calculate, you know, the birth and death of Jesus Christ using time. Your actual birthday, you calculate that using time. You calculate the day using time. I'm just going to go on and on and on. A lot of people reject that time is a very major form of analysis in the market, but they don't understand that everything they do on a day, when they look at their watch, they're using time, okay? And that's the most important thing. So all we're doing here is we're using time, the exact same method that you use to look at the sunsets every day, but we're applying it to the stock market, and we're using this exact theory to the stock market. But this chart here doesn't exactly give us time. This gives us angles, and we use those angles to calculate points in time in the future where the market could top out or bottom out. And if I go ahead and find on the gold chart, for example, that gold is resonating on an angle of, let's just say 197. What this will do is this will move in and make changes to this. If I go ahead and, you know, squeeze this around, etc., that gold is resonating to a specific time point, and it gives me that opposite, and it gives me the square, and it gives me the trine of those time points, okay? And also this one here, which is a special one. You know, we're looking at different angles. Now, everything in the world works according to these angles. I don't care what it is. You can take your date of birth, let's just say it's the 1st of Jan, and you could move in forward in time around a circle at different points in time. For example, a square, you might have a trine. So whatever point your birth date is, you would mark that at a specific point, and you'd move forward in time around the square in certain angles. Okay, now if you look at any astronomy or astronomer, they would say that, you know, conjunctions and trines of different planetary angles are important to watch and consider. Now humor me for a second, because we're not talking about planets right now, we're just talking about time, but we're using the same method of philosophy here. Okay, so we have our trine and we have our square. Now these are points in time that certain events taking place. Well, we do the exact same thing in the stock market, where we take a certain point in time or a certain price point and would move forward a trine or even a square of that point, and we would try and find where the market is likely to top out and bottom out at certain points. Okay, it's the exact same philosophy. Now again, you might be thinking, what the fuck is Jonathan on about right now? But I'm just trying to show you that when you look a little bit deeper and you go beyond, you know, the simpleton, an area of study that a lot of people will reject, and all I'm trying to do is show you that that field exists and how that field works. And if you're interested in that, well, I implore you to go ahead and study that field, because it is one of the greatest fields ever. But let's go ahead and squeeze back to the square of 9. I just wanted to explain what's going on around this chart here. So the square of 9, now let's go ahead and just find our chart here. What we're looking at here is degrees. Now if we go back to the square of 9, you'll see that we have degrees and these angles here. And if we sort of line up the 180 degree, if we find that the market is moving harmonically against this 180 degree line, so you have, you know, 0 degrees on the left, and you go around and you move to the 180 degree angle, well, essentially what we're going to do is we're going to repeat that same method of philosophy onto the market, especially onto the gold chart, and we can see that gold vibrates in one way or another to the 180 degree price point. Now the 180 degree price point is this blue one, and we can see that in the past, you know, this is just a natural harmonic, that was not a line, natural harmonic in the market, and the market will obey this harmonic, and it will come down and it will touch it and it will bounce off it 100 million times, because it's a natural harmonic. And this is this exact same harmonics that we're using in the Bitcoin price, but we've found the ones that work in gold. And also we have our 90 degree angle. Our 90 degree angle has the market gravitate towards it and bounce away. The market gravitates towards it and bounce away. It's the exact same philosophy. Okay, we can do this in any single market. I don't care if it's the price of a certain currency, if it's a certain cryptocurrency, if it's a commodity, if it's the Aussie market. This square of 9 is vibrating in everything in the world, and it also resonates exactly with this square and with also the triangle. Okay, so if you look at a circle, right, I'm going to explain the square of 9 and why we look at these degree points. And we have 360 degrees, or that 0 point, and we have the opposite of that is 180 degrees, and then obviously we have our 90 points. Well, all we're doing, you know, again, remember the square. So if we just draw our square on here, that is a square. If we draw the square, well, what we're getting is our 180 point and our 90 degree point. And we're just applying that same method, as I said before, to the stock market. And it's as simple as that. So anyway, I think I don't want to keep waffling on about that, because it's a very confusing topic, but I'm just trying to show you that there are things that in the market that you don't know, or you potentially don't know. And I want to show you how these things work. So that's all I have. You know, we've already done this on the Bitcoin chart numerous times, and we're now applying it to the gold chart. So if the gold chart comes up and it posts its bullish run, potentially into March, if you take a look at the back end forecast, what happens after that? Well, where does it come to? Does it come to one of these 90 or 180 degree angles, or does it scoot up to this one or this one? Those are what we look for. Okay, now if we can see these runs where it scoots up and moves between this one and this one, well, again, if it moves between this one and this one, those are just the things we're looking for. Okay, now obviously we can see that the market stopped here, it stopped in here. Well, there are other degree angles that you might be able to find in the market that resonate with these points here. When you get all of the resonation points, and I just haven't put them on there, when you get all of them on the chart, and I don't want to say all of them like actually pop on all the resonation points, but when you pop on all the major resonation points, you will definitely see that they always, majority of the time, always will hit a degree angle, because the degree angles are way more powerful and are actually the most natural support and resistance levels in the market. Okay, so if you can delve into the field of, you know, using degrees in price and degrees in times, you will be miles ahead of any financial expert out in the market. I can guarantee that. A lot of the financial experts and these YouTubers don't understand degrees in price and degrees in time. And if you wanna, then I would encourage you to research degrees in price, degrees in time, because that is the key to all market. Anyway, talk to you soon. If you haven't already, if you learned something, just hit that like button. If you didn't learn anything, go ahead and hit that, dislike button, whatever. It just lets me know if this information is informative and if you're learning anything. I'll talk to you next week.